Obviously, there's several questions there. There's the gold question, and there's the stock market question, and where's the economy going? So let's start a little bit with where I think it's a good place to start is the stock markets. We've seen stocks rising for more than a decade, and they've been going from record to record to record. And in the recent 2 years or so, gold has started to play catch up and is now overtaking the stock markets in terms of speed. And historically, when gold has been on a run, it's run for decades or more. So I think we're at the start of a very long bull run in gold, and I'll talk about why this is happening and what I think comes next. But let's just sort of talk about the big thing on everybody's mind, and this is I call it an event. So throughout history, in stock market terms, in gold terms, we have non-stop events. There's an event, when I say non-stop, every year or two we have an event. And I think tariffs, in my view, is an event. It's a global event. And what's been going on with the tariffs has been shaking everybody up a little bit. One day they're on, next day they're off, next day they're on, then they're off, then they're up. And there's been some very strong words used on both sides against the let's call it enemies in a certain sense. I mean, I use that with big inverted commas, who've been taking advantage of America, and I use that inverted commas as well, by offering their goods and services at too cheap a price, and therefore causing American industry to some extent wither away. So I'm not getting into I don't want to get into the politics of this or whether it's good or bad. I mean, every country's got the right to put whatever tariffs it likes on its local on imported products. I mean, most countries have what's called a VAT, value-added tax, or a TVA in France and so forth, a sales tax in America. And in most countries, as goods come into the country, they pay the VAT on the way in, and then everybody in the country pays the same VAT rate on both domestically produced goods and on goods which have come in from overseas. And I think there's nothing wrong with that system, because each country has to have its own level of taxation. But in this case, it's kind of gone horribly wrong, in my opinion, because it's kind of turned into a war, a sort of war of words, a spat over the tariffs with retaliatory actions on each side, which is not really the way it's supposed to work. But what's this doing? It's making people feel very uneasy, very worried, and of course, from a corporate point of view, they don't know where they start. I think it's time to have a revaluation of gold and go back to some sort of gold standard, and that would be a new Bretton Woods, where once again we're on a new standard. But I think knowing that this is coming, there's probably, and almost certainly, some central banks who say, if we have another Bretton Woods conference and there's a new gold standard, well, one, we're not going to let America be the sole arbiter of how much gold there is and what the price is. It's going to have to be some more uniform currency, maybe, as agreed between currencies. But those who've got the gold will be the ones who have a say in what the relative exchange rates will be. And therefore, I think a lot of countries are saying, let's acquire gold. But of course, as we stand, America still has far more gold than all these other countries. I think globally gold reserves are around 17%, but countries are trying to build that percentage of gold in their reserves up so that they can have a seat at the table if there is another Bretton Woods conference. But we don't at this point have any news that there will be such a conference. We don't know. So officially, China has a lot less gold than the world average. It's about 6%, and the world average is about 17% of reserves. So China's got a long way to go, and it's got a long way to go just to catch up with the American number.
Yeah. What is the official number in China? 3,100 tons or something?
Yeah, I don't have that. Yeah. So obviously, that's the official number given to us by China. But we do know that twice in the past, they withheld information about their gold purchases for many, many years, and then suddenly reported, oh, by the way, we forgot to tell you, over the last 5 years, we've accumulated 500 tons or 600, I don't know what the figure was. And that was suddenly put in. If you look at the World Gold Council's numbers, you'll see these numbers suddenly appear. So it's nothing. And then 1 year, 600 tons appear. And there's a little note saying China announced that they'd bought this over the last X years, little by little, and not told anybody. So, a lot of gold has been flowing out of London. They're 400-ounce bars coming out of London. They go to Switzerland to be refined back into 100-ounce bars and then go off to America as 100-ounce bars, which is what is used on Comex. We have seen in the month of February, and which is in the month of February and in the month of April, not so much in March, we have seen in February 3 times the normal delivery amount for a February, and in April we've seen, and we're only about 10 or 12 days into April, we've seen 3 times the normal delivery amount. When I say delivery amount, I'm talking about delivery notices. This is where gold is going to be delivered to people who bought the gold futures. So what can we conclude? That for some reason there have been, and there still are, big buyers out there of the gold in gold via gold futures, buyers of the 100-ounce bars, and those buyers are choosing to take delivery. Now, to start with, we might have thought in February it's all to do with the tariffs, because people are buying gold ahead of the tariffs and they want to be well prepared. But we now know that the tariffs won't apply to bullion, yet we still have these all-time record for April deliveries taking place. So what this means is that there are genuine buyers, it's nothing to do with tariffs at all. There's a genuine buyer or buyers taking delivery of 100-ounce bars. And now this is not mom and pop stuff. This is 100-ounce bars are like $300,000 each, a bit more than that. Whoever's taking delivery is a big player, really big player. We don't. Now there's several possibilities. It might be US banks who are preparing for what's called Basel III. Basel III is the latest banking regulation introduced by the Bank for International Settlements, which is not legally binding, but which is generally followed by major Western countries, and it's already followed by a number of Western countries. This year, we've got most countries, like Japan, lots of countries followed it in the past or starting to follow it in the last year or two. This year, Switzerland, United Kingdom, and EU are coming on stream with Basel III. America, we don't know when it's going to happen because they haven't passed the legislation yet. But Basel III allows for gold in your physical possession, if you're a bank, to be treated as a tier 1 asset. The importance of that is that it's treated as the safest and most liquid form of asset a bank can hold, exactly the same as holding cash in terms of the way the Bank for International Settlements looks at it. In other words, it ranks at the highest possible level when it comes to having enough reserves to meet regulatory requirements. So lots of banks around the world own gold, but they own gold futures. They've got gold, they've lent it out. But what this means is that if they want to qualify for Basel III, they can't own paper gold anymore. They can't have lent it out to a third party. They can't have it in custody by a third party. They've got to have it physically present in their vaults, and then they can call it a tier 1 asset. So this makes physical gold much more attractive than paper gold. And this might explain why we're seeing record deliveries out of Comex as banks, and I assume it's American banks, possibly are preparing themselves for Basel III by actually getting their hands on the physical gold instead of virtually owning it through paper, through the futures, which wouldn't count for tier 1 assets. So it might be that. It might be a large player like a government. Let's say, now I know there's been a lot of speculation that maybe the US government is buying it, either secretly in the same way that China might be secretly buying gold. By the way, I don't think China would take gold out of Comex because they could just as easily buy it from London. So I don't think China's the Comex buyer. But it might be Mexico. It might be Canada. It might be the United States, if that rumor were true. And of course, some people are saying that maybe the gold in the vaults isn't there and they have to replenish it. I don't believe that.
I was going to say they might have hired Captain Obvious, if that were the case,
It's a possibility, but it could be that America's looking to shore up its reserves on the sly, and that would have the effect of reducing the dollar and pushing up the gold price.